Eish, eish, eish. Latest Treasury Bill rate is making waves in Ghana. Have you heard about the latest Treasury Bill rate that was published by Bank of Ghana just yesterday? If you haven't, then you are at the right place. I'm going to break the rate down and walk you through why the rates have dropped to this particular point in time. For over 7-8 months, we've been experiencing the rate above 20%. But at last week's auction, when the banks went to buy Treasury bills from government, the rates have dropped tremendously. And as you know, I'm a servant. I'm going to break it down. I'm going to walk you through what the rates are for the various segments, what was the bid for the week, and what did government accept. So let's go straight into the result of the bid action that happened on Friday. So in terms of the request that the banks presented to buy Treasury bills on behalf of their client, it was around 18 billion Ghana cedis request or tender. Now, out of the 18 billion, government accepted just around 7 billion Ghana cedis. Just 7 billion Ghana. So it means that over 11 billion Ghana cedis were not accepted. So the first thing you need to understand is that if your Treasury bill was part of what was presented last week and it was not accepted, your account will still not be debited. It means that the bank will have to represent the request at the next auction, which is this week's Friday, and hope that government will accept that particular Treasury bill. And that means that once they accept, your account will be debited. So out of 18 billion Ghana cedis, government accepted just about 7 billion Ghana cedis. So let's go into it to know the latest rate that you see for both the discounted and also the interest rate. So let's go straight into it. If you pick the 91 days, the latest bid or rate for 91 days, if you are going the discounted rate, it is 19.76 for the 91 days. That's the discounted rate. It's 19.7633. Now, for the interest rate, if you are doing 91 days, it's 20.79%. 20.79% if you are doing the interest rate. Now, for the 182 days or 6 months, the latest rate for this week is 20.6158. 20.6158 for the discounted rate, and then 22.9851 for the interest rate. Now, for the 1 year, that's even worse. For the 1 year or 364 days, the discounted rate is now 18.5%. 18.5%. And then for the interest rate is 22.6994%. So that is the latest Treasury bill rate that you are going to see across the various banks. So these are rates, we call them weighted rates. It means that if you pick all the rates that the banks got, this is the average of all the rates for the discounted rate and the interest rate. And I know every time I do a video, people want to ask what's the difference between the two. For discounted rate, by practice, you receive your interest at the time the investment is being done for you. So it means that if I do my investment today and I'm expecting to get a return of, let's say, 1,000 cedis, the 1,000 cedis should be paid to me now. And then when the period is up, let's say 91 days, I'll get only my principal. That's what we call the discounted rate. And that means that the rate is always lower. Now, for the interest rate, you get both your principal or the amount that you are investing together with the interest when the period is up. And that means that you get a higher rate on that than the discounted rate. So guys, if you go to your bank, expect average rate of between the discounted of 19.76 and then 20.7 for the 91 days, and then 20.61 and then 22.96 for the 182 days, and then 18.5 for the 1 year, and then 22.69 in terms of the interest rate for the two. Now, why is government doing all of this? Now, government at the moment is not able to do much activity on the capital market or the long-term investment market, which is the bond. Because of the debt exchange program, no one wants to go into the bond now. Now, if you look at the DDEP, the bond rate came down. Now, government is making so much cost in terms of the cost that comes with Treasury bills is very high for government to be able to service them. Currently, we saw the Treasury bill around 30%, and that's the cost to government in terms of borrowing. Now, government's plan is that they want to bring down that Treasury bill rate so that at some point in time, the returns on bond will become higher than Treasury bill, which used to be the case. And when that happens, those who want to go long term will now go to the bonds again, and those who want to do short term will go to the short term funds. Of course, there are some rumors that government is also looking at going to the capital market to get cheaper funds from that place. It means that once they are going to the capital market, they will not need to put all their eggs in one basket by chasing after Treasury bill, and that means that they take opportunity to reduce the rate. And as I always say, the Treasury bill market is based on demand and supply. As more people want to keep their funds with government has the stronger and upper hand to negotiate for a rate that is lower, and that's exactly what we are seeing. So if you have already done your Treasury bill in the past, don't worry, this does not affect you. However, if your investment is about to mature, these are the rates that you're going to experience now, and that is exactly the latest Treasury bill rate as we can see for today, 3rd March 2025.